Welcome everyone to Fun Day Monday, where we learn to be a better trader. Real briefly, I'm not a financial advisor and this should not be taken as financial advice, nor am I recommending you to buy or sell any particular stocks that I talk about today. And that one particular stock is Freedom Foods Group Limited, stock ticker FNP. Had a monstrous sell-off today from $3 down to 20 cents on the back of a 9-month suspension. So 24th of June, opened up today on the 22nd of March. Massive gap down of around 93% roughly. And this was on news. Something to do with the litigation, something to do with a bit of cap raising, something to that effect. Look, I don't care. I'm not a boomer. I don't read the news. I'm not an investor. I'm here to day trade. And I want to talk about two concepts today. First one is BTFD. Buy the fucking dip. The second concept is pump, consolidate, pump, stonks. Now, I talk about this incessantly on Twitter because it is by far the most successful chart setup that you can pretty much trade, or at least that I trade. So having a look, BTFDs, typically I trade these, and I've traded about 5 or 6 of these in the past 5 years or so. There's always one every year, it seems. And typically they're 50 to 100 mil market cap stocks. So this is unusual in that it's an 800 mil market cap stock. So it's a little bit different because it's just a much bigger stock. It ended up playing out pretty much effectively the same. Now, BTFDs, they usually end up 100% gain from the opening price. Now, there's no guarantee that there's going to be 100% gain. It's just statistically and historically, 100% gain tends to be the minimum from the opening price. Now, occasionally, actually most of the time, what we end up with is an opening price, and then it usually has a flash dip and then recovers. Now, the flash dip here didn't really happen. There was only a few bucks that went through at 18 cents. We're talking about maybe like 7 grand or something. There wasn't a whole lot. So there was actually a lot of reload buying at around 20 cents, a lot of support. It shot up, came back down. It shot through VWAP real briefly. Like this just vomited back to the upside. Huge amount of buy pressure. So this is my entry at 26 and 26.5 for this stock on FNP. That was my entry. I never buy the open because, again, I was talking about that opening price action typically has a sharp dip. Now, why do stocks dip? Well, I don't really know. I imagine it's a huge psychological component. It's the same reason you buy anything that's like 95% off at a shop, right? I'm sure we've all experienced this. We've come across something with a massive discount, 90, 95% off. You don't fucking need it. You don't wear women's colognes. You're a fucking man. What do you need the scent of like cucumbers and mint on your fucking chest? Now, you don't need that shit, but you buy it. You buy it because it's 95 fucking percent off. The value. Can you imagine the value? Oh, man. At least your cat will appreciate the smell. But that's pretty much human psychology in a nutshell. None of us fucking want Freedom Foods Group. We don't even know what it is. It's just cheap. And so we pile in, right? That's the sort of herd mentality that drives these stonks to the moon. Now, when it comes to the second concept, which is pump, consolidate, pump stonks, this is the setup that I always love and admire, and it is the horizontal, the consolidation at the highs. Again, if you haven't watched my previous 100 videos, I'm sure at least 15 of them mention pump, consolidate, pump. Effectively, it's when something rallies really hard, and in this case, yes, it's sold off, but we're looking at 20 cents to 36 cents. That's almost 100%. That's almost 100% gain, and it's consolidating. You might be thinking, this is just hindsight. Well, yeah, look, in real time, you can't tell the consolidation's happening, right? If we delete this line here, delete that line there, we can see that it starts to consolidate after about the 5th or 6th candle, and we can see it just refuses to sell down from 33 now. It fails to make a new low, and it also fails to make a new high, and it kind of just consolidates in this range. And it's around this time that I bought in at 34.5. I added on to my position because the risk is very, very clear. What's the risk here, guys? It's around 33 cents. And if that line gets wiped, 32.5 is our stop loss. We pile in. Doesn't matter if we lose. The risk to reward is fucking brilliant. Now, if we go sideways a little bit more, we can see the upwards range is also sort of tightened up as well. So we really got 3 horizontals here that are pretty obvious. But really, it's this range here that we're looking at mostly. It's the most recent range that we can see, and then it breaks above both ranges anyway. So we're sitting pretty on this position, and really, it's just about waiting. waiting to see what the stock does. And of course, there you go. There's your 100% resistance. There's like the first sign of sell pressure there at 40 cents. Did a bit of a dip on reasonable volumes, and then it just recovered straight away. So, and this is something that I need to work on myself, because this is my exit price. I'm not too proud of it, but it was 47 and 47.5 cents. I got out in this range here. Now, for me, this was starting to look parabolic, and this is the hard part with pump, consolidate, pump stonks, especially if there's no historical technical analysis to fall on, is that you really need to start looking at the order book, which unfortunately after the first 20 minutes of match trading tends to be heavily manipulated. So it probably is worth waiting for confirmation of an actual reversal. You might end up selling out early like I did, and in this case 47.5 turned out to be way too early. You can see that was just the start. The fucking start of the parabolic move. So you can see how much I missed out on, unfortunately, but ultimately I'm still happy with my 26 to 26.5 entry, my around 34.5 cents entry, all the way to 47. So I'm very happy with that particular trade. But you know, this might be a little bit of hindsight learning for myself. I'm just going over my trade and looking what could have been done better. And I think in this sense, for myself personally, is waiting for that confirmation. And even if the stock does end up dipping a little further, I at least get that confirmation that the stock has stopped trending to the upside, basically. So there's that, and I guess there's also the VWAP standard deviation bands, which are always quite handy to have. You know, it always just sits above the first standard deviation band, even when it dips below. It's very brief, and I certainly don't think I ever would have held beyond this candle here. Just I would have sold alongside it. I think best case scenario is if I really honed down, hunkered in, and focused on my skills, then focused on the order book, then I probably would have sold into this. But look, hindsight's a bitch. I'm still happy I made coin. And the idea here is to learn. It is Fun Day Monday. We're not here to criticize ourselves too harshly. And look, there's one trade left, and that's 54.5, and that's at the VWAP. I wouldn't expect anything other than perhaps a quick bounce, maybe retest this horizontal. If it breaks this horizontal, then Jesus Christ, if we end up hitting back at that 75-cent range of the first standard deviation band, I'll be very surprised. But what I don't expect is today for it to just smash down to something like the bottom standard deviation band of 34 cents. I think that's a little bit too aggressive selling. Traditionally on BTFDs, monster sell-offs like this, you know, 90% sell-offs, stocks tend to make that 1 to 2 bags, and they kind of hang around for a day or two, and then they start selling off, and they end up drifting. So if we look at the daily chart, my sort of expectation, without understanding any of the fundamentals whatsoever, is would be looking at something like this, maybe just another candle to the upside at best, and what a fantastic looking candle that is. And then eventually it'll just kind of just drift like this all the way back down to 20 cents or something like that. Look, I don't know what the fundamentals is, and look, if it's bullish, then yeah, it'll probably trickle to the upside, but my expectation is there's a reason this thing sold off 90%, and I don't expect that this is going to go all the way up to $3 or something obscene like that. So we'll see what happens, but that's my expectation. I usually never trade beyond the first day of a BTFD, but look, I'm just giving you guys some hindsight as to what I've experienced in the past in terms of massive sell-offs. They tend to just have a slow day on the next day and then just trickle down, unless fundamentally they're solid, but I fucking doubt it, because what fundamentally solid stock sells off 93%? That's pretty much it, guys. If you learned anything at all, please do hit that like button, but more importantly is the sub button. Just hit that thing if you haven't already. I'd appreciate that very much. Otherwise, I hope you had a very happy Fun Day Monday. Thanks, guys.